if the currency crisis continues in the manner that we've seen and continues to manifest with this unbelievable amount of printing our ways out of this massive debt problem. So there'll be two forces at work at the same time. I need it to maintain my business. I need it to manufacture my commitment to XYZ state that's going 20% solar. And at the same time, there's a monetary demand that's increasing exponentially because the dollar is failing. I mean, there's things about the silver market I do not know, and I fully admit that. I mean, you know, one thing that no one knows is how big, I'm sorry if I interrupted, how big is the over-the-counter derivatives market? No one knows. So you've got the futures and options market that's transparent, and everybody looks at the COMEX warehouses and how much silver is in the register category or the eligible category, and how much is shifted between clients, how much has just been a paper trade with the medallion changing ownership, or how much has actually left the floor of the COMEX or one of the vaults, and all that stuff. And it's all good and it's all meaningful, but that number, those numbers are large, but it could be even larger, and I believe it is, in the, let's say, the merchant bank, bullion bank, LBMA subsets that work over the counter, which means there's no real records transparent to the public that exist that we can monitor. They exist, but they're between banks or between banks and end users, or, you know, mining companies or any part of the industry. And that could be a huge market. In fact, I'll make the point, and this has been made by others, but seldom discussed, is someone that's net short in the commitment of traders report that's always discussed at some level of silver investors. Some pay attention to it and some don't know what I'm talking about. But for those that look at it carefully, you could have a bank that on the COT report is net short, but in the over-the-counter market could be net long. I mean, the original intent was very good. I have nothing with the original intent of, hedging, farmer hedging his wheat production or corn production, or even a miner hedging their silver production. Problem with it is it's become the driving force in all those markets. It's not just silver that's abused. All these commodities are abused from determining the free market price, because the derivatives market is so beneficial to those that are adept at using its ins and outs. For example, let's just take a real quick thought experiment. Talk about silver going from, let's say, $26 to $28 an ounce. So if you're a retail investor and silver's at 26, you might have to pay in a good market where the premiums are low, maybe $3 or $4 over. So 26 will add 4, it costs you $30. So silver goes from 26 to 28. You haven't even broken even if you need or want to sell it back for fiat. I would suggest you don't. That's not why I buy silver, but maybe it's why you buy silver. If you are looking for fiat, play the derivatives game. That would be my comment. So, but during that $26 to $28 move, the people that really are adept at the ins and outs of the derivatives market, that's as if silver had gone from 26 to 46 and back a couple times. They're making 5, 10, 15, 20 times on their money, on their fiat, I should say. Whereas the buy and hold, have a hedge, I listen to David, I think he's honest type of person. And this is I think it's wrong. I mean, I don't think it's wrong to have a futures market. I think it's wrong to abuse it. I mean, going back to, and who's to say it's, when it's abused and when it's not? Well, that's why there's regulators and regulations. They're supposedly there to make sure that there's a market that's, fair. And it's anything but. And again, it's not just silver. I mean, it happens in soybean oil. It happens in cotton. It happens in orange juice. I mean, it happens in all the markets. And yet people just accept it, especially people that are stock investors only that know very little about commodities. And it happens in stocks. I mean, it's pervasive. It's everywhere. There's really, as one of the well-known proponents of precious metals says, there aren't markets anymore There's only manipulations, which is pretty much true. If you are financed by a banking entity to build the mine, the bank has control of the silver production, and in some cases makes you hedge in the market, and probably an over-the-counter derivative to basically set a price that they want. But you're kind of at their mercy because you borrowed money from them to build out the mine. This is why a lot of people are a little bit, I get the question very often, why don't the miners get together and make a free market in silver? And the answer is because the banks control the miners because they financed them. So they're basically at the beck and call of the people that have the quote unquote money. And so that's the problem in most cases. But with a Keith's model, if they all did that, if all the miners were, let's say, free and clear of having to borrow money from a banking entity to build out the mine and produce what they wanted to, and then went in the, let's say, the more of a free market methodology, then you would see probably a different price. Well, I buy from almost everybody. I mean, because I've known so many of the dealers over the years, and so I've bought from just about every mainstream dealer in the United States. I bought from Kitco. I bought, from Mike Maloney, Andy Scheckman. One of my main purchasers is direct with the wholesaler, so obviously I get a very good price there. I won't name him online because I want to keep his location secret, but it's in the U.S. Bought overseas. I bought just about anybody you can name, but the bulk of what I buy is pretty much as close to wholesale as I can get. Well, I have a pool account with Kitco. Just it's very, very, very small, just in case something happens, good or bad. I will be informed because I'm on their mailing list. But I have nothing against paper silver if and only if you have established a position that you own and can touch, and that's satisfactory for your requirements. So in other words, if you use the 10% model we talked about, and 70% silver, 30% is gold, you've got it tucked away where it's safe and you can touch it, and you want to go start playing in the ETFs or futures or options or mining shares or anything else, have at it. That's my attitude. But I also have the reverse. If you are in mining shares, ETFs, leveraged ETFs, 2 or 3x times, whatever, and you think that's your silver investment and you don't have any physical you can touch, I think you're making a big mistake.